Pretty good afternoon, everyone, and welcome to today's uLaw webinar. The topic or title for today's CPD webinar is Disbursements Demystified. As we've been sharing the latest and greatest in terms of our agenda for these upcoming webinars, we welcome you to visit our website at info.uLawPractice.com/webinar for the latest information on upcoming webinars. And as you can see, today's webinar for the 24th is a CPD session, and it's been accredited for 1 hour of professionalism CPD credits in the provinces of Ontario, British Columbia, and New Brunswick. As always, once delivered, these webinars are recorded and are available in our YouTube channel under our playlist of webinars, or you can check them out under uLaw webinar, and you can see the more recent ones arranged by date. The conference ID is 94630-328, and I mentioned that, and that's the participant code. Again, simple housekeeping. If by any chance the quality of your internet or quality of the audio is not great when you're listening to this through your computer, then we encourage or request you to use the phone numbers that have been provided through our email, as well as what I've pasted here in our chat window. At all times, please to use the chat window to ask any questions and correspond. Since this is a CPD session, it's going to be a bit of a monologue for many reasons, so that I can stick to the agenda and deliver the content. But feel free to use the chat window to ask any questions pertaining to the webinars titled today. Both me as well as my support staff would be more than happy to answer them during the presentation or maybe at an opportune time at the end of the presentation. Okay? So the title once again is Disbursements Demystified, 1 hour of professionalism CPD credits in the provinces of Ontario, New Brunswick, and British Columbia. Like every other uLaw webinar, today's webinar has this specific agenda. We're going to be talking about disbursements and how best to manage them. As you are pretty aware, this is a critical component of any legal firm. The expenses that you incur on behalf of your client and how best to manage them. Is there an opportunity for you, especially if you have a trust account, to be able to disperse or pay for these expenses directly out of your trust account? And what are some of the benefits of approaching disbursements payout through that vehicle? How best can you manage your disbursements for your operating account as well as other accounts that you may use, such as your business credit card or your own personal money to pay for these disbursements? And when it comes down to types of disbursements, we certainly want to talk about some examples, such as mileage, especially around general disbursements, because in the concept of general disbursements especially, it's important to recover the money. But if you can categorize these disbursements, it's probably a better, faster way for you to assess and get more information, intelligent information that allows you to plan for these disbursement payouts in the future. So are you prone to having customers where you have to spend a lot of upfront disbursement costs for travel, or is it mostly for certain billable or actual costs, which means that you can easily recover them? Are you having a profit or a loss margin? And if it is a loss margin, then certainly being aware of what those numbers are, right? Very critical, especially if you're using general disbursements, which in hindsight means that you've paid for it upfront, right? And you're waiting to recover that through an invoice that you have now generated or any other means that you're now waiting for money to be paid by the client, okay? And last but not the least, when it comes down to expectations from your individual law societies in terms of bookkeeping, in terms of compliance, in terms of the documents that you need to present when being asked for, either through a spot audit or otherwise, or a planned audit, and we'll definitely talk about what those expectations are and how best you can manage them using the right approach, tools, or manual work, as long as you've prepared and planned for it and know what to expect out of these documents. Okay? We've certainly run these webinars in the past, and it's always a interesting subject matter when we talk about it every time. Because no matter how many times we remind ourselves, this is one component of a legal office's life that sometimes can catch you off guard, can sometimes be getting to a point where it just overwhelms how best you manage them, right? So from a layman's definition, you being able to appreciate it better, disbursement is nothing but expenses that you as a legal office incur on behalf of a client, more specifically on behalf of a client matter, where you have taken the act of paying out our money in advance, especially if it's general, or even if it's trust, then you can draw out of your retainer amount. But if let's assume it's general account, then you paid for it as upfront. Be it, court fees or application fees, maybe a, mileage, could be fax, could be postage, could be outsourced consultancy work that you have involved a third party in. So there's a disbursement where you've incurred an expense, but it's not for office expenses. It's pertaining to a specific matter or file for a client. Now, in terms of accounting component, the bottom line is that you need to be able to record this particular transaction as and when it has occurred. So closer it can be to when it actually happened, then you don't have to put that in your memory or don't have to write it down and forget it. You can essentially ensure that you've used the right process to record this transaction so that you can reflect on it, such as a reconciliation at a later time. So record to reflect, which really means that you can now balance your book. When we talk about books, we're talking about your ledgers, your journals, and all the fun stuff that we'll get into later in the presentation. Okay, so bottom line, expenses incurred on behalf of a client specific to a matter, and you as the legal office need to record this transaction, and depending on the nature of that transaction, of that disbursement, of course, you can take different paths of the types of documents that you may have to present or produce when being asked. From a law society standpoint, as I mentioned earlier, the bottom line is that they request or need you to manage and maintain proper bookkeeping of all these transactions. Now, given the fact that disbursements are an integral component of many legal offices, the question really is, how best can we manage them? How does a legal office manage today? What are some of the rooms for improvement if there's a specific pattern of managing disbursements? Then maybe it's working for you, which is then great, because you can continue down that best practice route. Or if for whatever reason, if your days of sale or if your ability to recover these expenses that you paid for is taking longer than you had originally planned for, because everyone who's running a business for profit needs, of course, appreciates the value of cash in hand, and you want to make sure that you are recovering these expenses that you paid for within a certain agreeable time, going back to your retainer agreement, which certainly states the rules that govern that engagement with that client, right? Because each and every retainer, each and every situation can be different with clients. And that's why we talk about disbursements being very specific to a file or a matter, right? So you could have one matter for the same client where disbursements are included. You may have another matter, a totally different nature or area of practice for that same client, a repeat customer, where disbursements may be spent separately. You may have a third situation where you're paying it out of trust account, right? So there are different approaches, and exploring these approaches and finding the best practice for a type of area of practice would now allow you to make smarter decisions in how you, as well as your growing legal office, can manage disbursements. But some of the fundamental steps that I'm sure many of you are doing it in many different ways, but we want to reiterate these fundamental steps, especially a lot of the audience in our webinars these days being entrepreneurs and students who are aspiring to be the next wave of legal practitioners. We want to highlight some of the key steps that you would consider taking. First and foremost, and this is something that we repeat in all of our webinars, is the fundamentals really builds that strong base for a good bookkeeping process or process. And one of that first fundamental step is to find a way to record these actions or transactions that happen as and when they happen. Like how you receive a retainer is a action that's happened, it's a transaction that has occurred. Likewise, an invoice that has been generated is an action that has taken place that needs to be recorded. Likewise, you have a disbursement, which is an action of you paying an expense for a specific need, and that needs to be recorded. Recording these disbursements as and when they were paid, closer to the date of when it actually happened, makes it easier for you to manage the nature of the transaction when it comes down to bookkeeping, managing these records, and then reflecting on these records, as I mentioned, for your reconciliation, which is a way for you to compare what's really happened with your financial institution's books with what you have managed internally as a bookkeeping for your legal firm. Okay? And of course, recording that in time allows you to keep that reconciliation well within that period or date or month that you're looking to reconcile. So if you actually paid out a disbursement maybe today, and if you can capture it well within the month before reconciliation, then you know that that record exists when you do your reconciliation. If you've not captured it, when time comes to reconciling it, you're going to find that problem anyways, which states that you've just paid $100 out of your operating account, which reflects automatically in the bank or financial institution, but you've not shown for it within your own bookkeeping. The bank is only going to say $100. Unless you have a great memory, you're not going to sometimes remember what was that 100 for. Sometimes application fees, court fees can have some similar numbers. There could be multiple hundreds, and now you're now catching back. And that's where a lot of time is spent in being able to reminiscence these expenses and then really think about, oh, okay, that one went there, and then you have to go back, manage your books. Rather, long story short, find an easy way to record them. If you're using a practice management system, great, that allows you to record them, especially today with the advent of technology. Through Cloud Technologies, you're able to do that. If you're using an Excel sheet, again, make it a process end of the day or as and when it happens to take a voice note and then go back home and enter it into the Excel sheet. Or if you're a slightly larger legal firm, you, of course, delegating this work to other core workers, then that's another way of doing this too. But do your best to record them as and when they happen. Yes, you're now recording them, but what are you recording when it comes down to these transactions? Again, some fundamentals. It's not just enough to say $100, court fees. You need to now be able to relate it back to a client and a client matter. There's two reasons for that. One, of course, a certain document, such as ledgers and journals, do ask for that information. Secondly, for your own internal sanity and being able to analyze the data, you have a better appreciation or understanding of where these expenses are typically being spent in your firm. I'm sure you want to understand that, to appreciate where the money is going, which type of expense takes the most time to recover, right? So either you find a different strategy to deal with that if that's a pain point in your business, or if there's a certain advantage to doing certain things the right way because it's benefiting your business, then you can continue to stick that route. So it's a two-way street. So being able to record the client's name, the specific matter or unique file number that you have for that matter, that this particular disbursement was related to, is fundamental. Now, Another very important component of recording that transaction is first having an understanding of how was this expense paid for? What financial vehicle did you use to pay for this? Because that can be varied in how you paid for it. Let's say there's a courier fees and you forgot your wallet, and I always use this example because it's still very much applicable, and you don't have your business financial vehicles. You don't have your business credit card, you don't have your business debit card, right? And you only have like $20 cash, and that's your own money that you've earned, and now you're paying for this on behalf of your client's matter for your business, coming out of your own pocket. So that's one route. If you've planned for this and you know that this is a disbursement for the type of practice that is, you know there's going to be about $200 of disbursement, you accounted for it in your retainer, and you're now paying for this by writing a trust check. That's another route. Or if you're paying for this using your operating account because you collect airplane miles or points, and we've seen that with legal firms do that. You're paying for this using a business credit card that collects points, but you can now be certain that once you have expended that disbursement, that you automatically find your way to record them and reflect them down in an invoice so that you can wait to recover that money. That's a third route that typically you might end up paying for this disbursement, and that needs to be recorded as well. And this is for your own good, because if you paid for it and if you're not accounted for it, then those are opportunities to recover the money in time lost. And sometimes if you've not accounted for it in time, depending on the nature of your retainer letter, you may not be able to retrieve or recover that money in time, and that money is then gone. That ends up being a loss in your business. And that's what we're looking to avoid, right? Okay, simple steps to be able to record disbursements. So earlier in the webinar, as part of the agenda, we discussed the two important financial vehicles or routes that you could take as a legal office, one being the trust account and the other being the general account. There are multiple pathways, let's call them, within these two different ways of doing things, right? And we spoke about some of the advantages that this particular trust account presents itself to your legal firm. Keep in mind, very few industries have the opportunity to take money in trust for work that has not been done. As the word itself sounds, this is money received in good faith or trust. So when you're expending them for the right reasons, then you don't have to necessarily account for them because you're able to record them and show it as part of your bookkeeping. So what that really means is, let's say that you've received a retainer with a $1,200, and now you're using your trust account for pay, let's say another $200 towards a court fee. You're able to show that in your trust ledger and shows up in your journal as well. And clearly in the invoice, you could say that $200 was withdrawn on behalf of this court fee that you've paid for. Now it's retraceable because that maybe you had a trust check number. You don't have to invoice it and wait for that money to be recovered because you're just using money that you received from your client that you had already accounted for as part of that retainer. I know that's a long English sentence, but bottom line, all we're saying is disbursements really aren't money that is yours to begin with. It's an expense. Unless you're looking to make a little profit out of these expenses, then which is a different case. But at the least, what we're looking to do is avoid incurring a loss by not being able to recover these expenses in time, right? That's the bottom line. So why not pay straight from the trust account and keep it simple, especially for expenses that are on actuals, right? So that's one route. Within that trust account, you can take two pathways again. I'm breaking that trust route into two pathways. One is, let's say you have a retainer of $1,200. You've written a trust check for that $200 court fee, so that money is taken directly out of your trust account. The other route would be where you actually do have a retainer, but for whatever reason you don't want to pay for that disbursement out of your trust account directly. You still use your operating account to pay for it. In this case, there's one slight advantage compared to directly paying it out of your general account. The advantage is that, yes, you do have to reflect this disbursement as part of your invoice, but now you can do what's called as a eligible payment from your trust account into your general account and pay yourself because you've got the money in your trust account. So the first, money is taken directly out of the trust account, and the second, you pay for it using your general account. The fact that you have a retainer in place, you're now able to do that eligible trust transfer, and that's the valid reason why that money is being transferred over from trust to general. But again, now you're touching two books or two different sets of, let's call them business accounts that you have. You have a trust book that now is being touched. Money got into the trust. Now money is leaving for $200. And on the other side, you have a general book where money is now entering into the system from the trust account. So be mindful, every pathway that you take has certain consequential documents where these pieces of information need to be reflected. That's it. But let's say you're not having any retainer to begin with. The trust vehicle is not at all being used. Maybe you don't even have a trust account, and you're just using your operating or general account, as we call them, to pay for these expenses, disbursements. Then there's just one pathway, which is you pay for them in advance using whatever means. You use your credit card, sometimes personal credit card, owner's pocket, which means there's one more further step for you to recover the money for yourself individually. But as a business, what you would do is ensure you're recording all these pieces of information and reflecting that in an invoice as per your scheduled plan of action for these invoices. And then you have to wait for your client to pay you for that invoice. Of course, with the advent of technology, once again, practice management systems have made it now easier for you to recover that money by facilitating, let's say, online payments, where you can have a little link where you send your client that link, they click on it, they're not sending you checks anymore, they're just clicking on a link and paying for that expense or that specific invoice that includes that disbursement, and then you're able to recover that money. But if you've not done that in time, then you're essentially have to follow up. You have to now start to go a couple of months back. You're doing a lot of catch up. That's when it gets really confusing, and that's when you have to spend a lot of time to catch up. Okay, so two different main routes, two pathways within the trust, one specific pathway within the general account. So you've recorded all of this information and you've decided the route you want to take. Now the question is, as I mentioned before, when do you recover this disbursement? How often, every time you have a disbursement, can you do that? Or do you have to wait for a specific logical closure to generating an invoice? How do you do that? And the answer to that is cliche. It really goes back to your agreement or your retainer or general agreement with or engagement letter, as we call them, with your client. Again, depending on the decision you've taken, as I mentioned before, if you've paid this right out of trust, you don't even have to generate an invoice. The money is left the trust account. You just have to reflect them as part of your statement of activity to your client or as part of your ledger, which automatically happens behind the scene, or maybe you need to make it work so that it reflects that $200 leaving the trust account. Right? And to your customer, you may send an invoice that reflects that, but then that's more after the fact. That doesn't have to be an important step for you to make your money. Or if you've got this disbursement paid out of your general account, and if you have retainer, once again, you're reflecting it in an invoice, and you can do this at any time because now you're just saying, this has happened and I'm going to be moving this money over. So it's more information. You're not requesting the client to take an action on that invoice. But the third component that we discussed around paying this completely out of general, it actually requires action from the client, and that's where this question then becomes that much more important. Are you constantly bugging your customer for action, or how are you doing that? So that follows your schedule of payments or your planned way of generating invoices from your customers. Going back to your general agreement, your retainer agreement, whatever you call it. So either way, you still have to record the information, the amount, most important. I even skipped that whole component. And within that amount, talking about the pre, post-tax, and if there are any taxes involved, what they were, right? And the last thing is, again, as we discussed earlier, especially around general, specifically around general, if there's a markup or a markdown on these expenses. So sometimes, for example, you may have a certain software that you've purchased in bulk for licensing, but then you're able to split them. Maybe you did your hard work to get a discounted price of that, but then now you're segregating that cost across clients, potential for a markup. Sometimes you may have to go to court and you are unable to do that and you've outsourced it last minute to another third party, but you never accounted for that with your client, in which case maybe a marked down expense for travel. Two different examples and two different types of disbursements. But depending on the cycle, typically we've seen legal firms pretty much generating invoices as and when certain disbursements occur, as an opportunity to squeeze them in within an invoice, especially if you've had dockets done. But for corporate matters, and I've discussed this before, you may have a specific cycle on a monthly basis, bi-weekly basis, and being able to accommodate all dockets and disbursements that have incurred in that time period as part of that invoice. So depending on your retainer agreement, you would generate that invoice and then wait for a payment or do the trust transfer. Okay? As I mentioned, for every record keeping of transactions that occur, especially when it comes down to money, you know for a fact that one financial institution's books are going to be filled up. So the bank is doing their job, and now you have to do the other side of the job, is to record these same transactions within your own bookkeeping. Now your own bookkeeping has more meat to it, because the bank is not worried about your reconciliation. You are worried about your reconciliation. The bank is worried about their reconciliation. That's why money coming in is called credit from their perspective. Ideally, it's a deposit or a withdrawal. So your deposit is a credit to them and vice versa. So it's important that you worry about your own books and use the financial institution as a way to balance your information. Cross-check, verify, validate, whatever you want to call it. Don't depend on the financial institution's information. It's more powerful when you have full control or understanding your books and the numbers that are shown for in the books. Because sometimes banks, such as bank errors, may occur, and when you're solid about your side of the house, you can easily understand where the mistake was without having to spend too much time. Yeah? Okay, so yes, you've done the right things. You're generating these disbursements and you're recording them. Now you're starting to generate invoices that include these disbursements. But when you do actually make those disbursements, as we discussed before, there could be many different routes that you take to pay for them, but there are many different types of disbursements to begin with. And each type presents itself an opportunity to take a route that you best prefer. A simple rule would be if it's on actuals, then for sure you can use the trust account as an option. If it's not on actual, then do not use the trust account. Keeping it as simple as that. And now it comes down to examples of actuals. So any fees, government fees that you're paying for that have a stipulated cost. So the government fee is not going to change. You're not going to go to Walmart and pay a court fee for $180, go to Staples to pay that same court fee for $200, right? That's never going to happen. So if it's a expense on actuals, you're going to do it at that. Whereas if it's a unit rate, if it's, other expenses that are not actuals, so you go to Walmart, they charge you $8 for a fax. You go to Staples, they charge you $6 for a fax, right? So those, definitely general. Okay? Recovery of expenses and actuals, you can use both trust and general. Recovery of expense with profit or loss margin, recommended to use the general account. Okay. Let's say you've figured out how to record them, how to relay them as part of that invoice. Now comes the reflecting part. There's two aspects to reflecting these numbers. One, of course, is your financial institutions documents that you can reflect upon. The other two are, of course, the way the auditors or the way the Law Society wants to reflect on those records. And there's a certain template that they've devised so that it can be standard across all legal firms so that the auditor can look at it from a perspective that is now standard and common across firms. And some examples of such standard templates include your ledger and journals. Now you have your trust ledger, so if you're dealing with paying disbursements out of trust, then that needs to be reflected in the trust ledger. If you're paying for these disbursements out of general, then of course, as you can clearly see, there's some additional information that's captured, especially splitting your disbursements across the actual amount paid and any provincial taxes that would add it on top of that. Because that's, again, money that you may have to, again, depending on your situation, pay for it as part of your tax filing. And you can clearly see where in this example of a trust ledger, again, this is a little excerpt taken from the bookkeeping guidelines, some of the important details that we spoke about while capturing disbursements. The one is the date, particulars. You can do definitely better with those particulars by making it a little bit more explanatory as to who the client was. That's why you have right at the top the ledger based on the matter. In the case of a general ledger, you can clearly see the date is standard, particulars are the same, but now you have the expenses split with the amount, and then you have a provincial tax, if applicable, to be included as part of that ledger. So you went to Walmart and you paid for a certain fax or maybe for print, and I'm sure you've seen that comes with taxes included. So you have $113, maybe $100 was the expense, $13 was the tax they charged you as provincial tax in Ontario. Each province has its own tax numbers, right? So that needs to be reflected as part of that general ledger, especially when you're managing disbursements. We spoke about ledgers, and we'll talk about another type of document, and these are the two important categories of documents that you need to worry about. Ledgers and journals. Very straightforward. In fact, we've done a complete webinar just talking about ledgers and journals. Okay. Now, when it comes to disbursement journals, again, just like how you have a differentiation between a trust ledger and a general ledger, again, the details that you're now capturing within these journals may vary when compared to ledger. For a good example, in this particular ledger, you see the date is the same. It was there even in your ledger. But there's something new, a column called method, which you did not see in your ledger at all. Because in that particular document, they really don't worry about it, right? It was just what was the fees. But this ledger document really does not care or capture how you paid for it. But we did capture it, right? Remember we spoke about needing to capture how you paid for it. So clearly states here in the journal is where they are really worried about it, because it gives them a better audit trail. By looking at the journal, they know the audit trail of how did this money come out of your business. It comes out of this check. Question is, do you have a copy or a receipt reflecting this? Right? So that may be the next question. So having these receipts handy helps. Having these remittances for these checks that you pay out, very important. Another important component that the journal asks for is, who did you pay this to? Of course, if you paid yourself, then it's your own name or your firm's name. But if you paid it to someone else, and you can see in this example, office supplies going to Acme, office supplies, the journal certainly highlights to whom was this payment made. So this could be, the Ministry of Finance, Ministry of Attorney General, depending on the type of expense. Could be Walmart, depending on the type of expense. And then the particulars, client and purpose of payment. Gives you the opportunity to make the meat of your bookkeeping that much better. You would not find this across your financial institution. It would just say 565, right? Because it's not an institution specifically meant for legal practitioners. It's a financial institution that's meant for everybody. Some institutions, depending on who you bank with, of course, give you a little bit more information, which is really handy. Can't say no to it, but nothing like you being able to categorize and validate the meat of that transaction, to give more meat to it, more meaning to it. And that's where it helps to have these documents available. Okay, so journal, method, who is this paid to, two pieces of information that's different from your ledger. Likewise, your general receipt journal, similar to your general, you have your HST or your provincial taxes separated out. So you have a trust ledger and a trust journal, disbursement journal, and then you have your general ledger and your general receipts and disbursements journal. What 5 documents? Now there's another document, and this is where sometimes if you're doing this manually, you may or may not have this document readily handy, but this is one document we recommend that you keep handy, which is the fee book, because the fee book ideally records all of the fees, and disbursements many times are part of that fees or invoices that you've generated. So let's split your overall invoice as fees from dockets and disbursements to recover, in which case, as part of that fee book, invariably those disbursements make its way in, because the fee book records the invoice number, of course the date, the invoice number, who was this for, and how much was the amount. And then you divide them based on the legal fees and the disbursements. And hence, the disbursements find their way now into this next document called fee book that you need to remember. Again, going back, you have your ledger for trust in general. Again, the question is always, if I don't have trust, what do I do? You don't have to worry about the trust-related documents. Focus your energy on the general. But if you have both, depending on the route that you may have taken, you may need both documents. You have the ledgers for trust in general, you have the journals for trust in general, and then you have the FIBO. And that's pretty much it in terms of important documents that you need to be able to reflect based on capturing or recording these transactions, relaying them through an invoice or other ways, and then being able to reflect them as part of your bookkeeping compliance. Of course, there's an important step before you generate these documents, especially the ledgers and the journals, and that's the reconciliation. For reconciliation to be a successful act, you need to be able to record it in time, relay it in time, so that it's now available for you to reflect upon. So you reconcile, which is where you compare all the information that you have recorded with what the financial institution says, making sure they match. If they don't match, the reasons why they don't match. And then once you've done that reconciliation, you pretty much, for lack of a better term, set that information in stone, and hence generating these documents are pretty much, should be a pretty easy transformation of those numbers into these templates. So if you understand what the template requires, it just makes it easier now for you to reflect them however you choose to. Use an Excel sheet, use a legal accounting software, practice management, pay third-party services to get them done. But you need to have a better appreciation for what's requested in these documents. And of course, we're an advocate for legal accounting. We're a legal accounting software ourselves, but beyond just a software company, we believe, especially from the country of Canada, where legal accounting and compliance is given that much importance, we believe if you explore the use of legal accounting software, it would certainly benefit you, because the legal accounting software, and no matter what that software may be, cloud-based, PC-based, these legal accounting softwares were purpose-built to give you that reflection. It was purpose-built to make the recording of those transactions easier, right? Legal accounting software also allows you to make it easier to make confident relaying of that information. If you only docket it for $200, and if the disbursement is only for $100, you're only going to be charging $300 plus taxes. You can't just randomly send an invoice for $800, which makes no sense. Or you can't randomly move money from trust to general. Typically you shouldn't, but there are some checks and balances within these softwares that protect you from making those human errors. Let's put it that way. Okay. So capture them in time, relay them as per your agreement, and reflect upon them at least within a month so that you're ready to show them with confidence to your auditors or whoever is asking you for it from a compliance standpoint. Okay? Because finally it's about the compliance and accountability. And a final byproduct of doing these acts meticulously, regularly, gives you the types of analytics that would now empower you and your legal firm, whether you're a solo practitioner, growing legal firm with co-workers, or a large legal firm with many partners. Data is almost become today's gold. You can see a lot of software, you can see a lot of information that's being processed from data that exists. So data exists, but find the right means to extract meaningful, pertaining information from these data. So if you can find a way to categorize and use legal accounting softwares to help yourself categorize these expenses, the next time you're reflecting these expenses, those categories already pre-exist. You're just using that as a way of reflecting them in these documents. Why manage and the benefits of managing disbursements, right? Bottom line, it affects your profit margin. You see a lot of, again, these slide shares going to be available to you in our YouTube channel as early as Monday. But the one takeaway from here is that if disbursements are not managed right, we've seen this, it certainly affects your profit margin. And any software, legal accounting or otherwise, can only go so far. We've not gotten to a point where it's really automated, it's artificially, it's pretty much forcing you to do all these right things. We haven't gotten there yet, but there is certainly an important human touch to this, and that's your touch of a certain discipline that you and your legal office develop to help the software, to help this tool perform at its best. And if you can do that, find the right process, the discipline to record this information, then the tool, legal accounting software specifically, makes it easier to do those next two steps. Relay and reflect. Okay? Another takeaway, if you will, is if you've not been using the trust account for whatever reason, maybe you thought it's cumbersome, it's going to now reflect on my trust money, and trust is always confusing, then think again, because when you pay for disbursements with trust, believe it or not, there's less bookkeeping to show for. Right? If you're paid out of trust, it's only the trust book that you need to reflect. That's the ledger. And anything related to trust, ledger and journal, you don't even have to worry about general disbursements. And last but not the least, again, it's about compliance. So when you're reconciling for that date range, ensuring that all transactions that have been recorded and need to be reflected are contained within that date range. Otherwise, again, as I said, there's a lot of catch-up that needs to be done to bring you up to speed. And time and again, that's really where a lot of the time and money is spent, is to catch up. And, again, we're just human. We tend to sometimes procrastinate. Sometimes life gets busy. You're focused on other bigger priorities. And then this is like, oh, I can always catch up later. But they all add up. They either add up as time for you to do it if you're doing this, or can add up as time and money if you've got someone else to do it. Irrespective of the tools you use, where you save money is if you're using, let's say, the right platform that's best suited for your practice. Once you've given that platform enough information at the right time, that tool or platform can reflect back on other pieces of information that you don't have to do it. You don't have to templatize a ledger every time. The software knows how to fit it in that template every time. But it still needs the information that you need to feed it in. Okay, I'm not going to bore you with that same statement again. So bottom line, find the discipline to capture it. Find the right tool or your partner to help you reflect all that information in these specific templatized compliance documents. That's now beneficial for the Law Society, beneficial to you, because you can be now a confident practitioner, not having to worry about this always hanging over your head. And last, a big part that you can gain out of this is the truth in the numbers and the information that we gather. For example, if you've got your disbursements right, you know for sure what your profit margin is for that month, right? Alrighty, so with another 9 to 8 minutes left in our overall webinar, of course, uLawPractice, we are a Canadian company based out of Ottawa, legal accounting, practice management, court forms automation, 3 important aspects that we do. And I'll shift gears, really. If you have any questions about the company, do visit our website, do reach out to us at support@uLawPractice.com. I'm going to just shift gears into showcasing what we discussed, not showcasing the product, just using it as a means, trying to showcase how you would actually go about doing this fast and easy. So yes, today's webinar, as I get into this, today's webinar is accredited for 1 hour of professionalism CPD credits. Okay. Let's say we add a client. I'm going to skip the details because I really want to get to the point where we create the matter. But ideally, you want to enter source of contacts, more information about the client, an important piece of information that's important for your compliance in client management. But for Mr. Smith, I'm going to go ahead and create a matter. And let's say this is, okay, just call it small claims for now. Okay. Alrighty, so the first route we spoke about was taking the trust account. So if you've got a retainer, let's go ahead and say, all right, I have depositing into my trust account a retainer. And let's say you know that there's a certain disbursement component to dealing with this file. Or if you're just getting started, you may not know that, but you account for it anyways. As you mature in a specific area of practice, you get better at refining the amount itself. I'll say $1,130 plus 200, so $1,330. So $1,000 is my legal fees. Let's say I'm from the province of Ontario. $130 is my HST, and then I pretty much know that there's about $200 of disbursement involved. I'm adding all that up and asking for a retainer of $1,330. I can, of course, collect this using a credit card through integrations that we've made, or maybe you receive a check, a trust check. Now you're depositing it into the appropriate trust account that's meaningful, because you may have multiple trust accounts. And you provide, importantly, as part of compliance, a retainer receipt thanking your customer for that trust payment. Okay? So I'm logged in as a fictitious legal bond, Roger Moore. Alrighty. Funny we say that, but we often joke about it being legally bond, like the movie Legally Blonde. Now let's say I'm going ahead with my disbursement. Okay? I can use the first route where I'm paying for that disbursement right out of the trust account. So it's paid right out of trust. It's $200. Now is where we're capturing all the details. So when did this happen? How much was the amount? How did you pay for it? Maybe it was a trust check, description, or fees. Who has paid this to? Remember the journal we spoke about, asking you for this. And which financial institution or vehicle did you use to pay for it? The same CIBC bank. You can print that check if you like, but I'm going to skip that. I'm going to say, yeah, I just made a payment of $200 on the 24th of September, and that's that. Now you notice right away the trust receipt that was originally $1,330 dropped to $1,130. So if I were to go in and let's say into my accounts I say monthly compliance, I'm going to generate that trust ledger. I haven't reconciled for the month of September, but let's say there's definite truth in this. I could do it for the whole month of September. And I'll just wait for it for a second. Okay. You can see all my clients. But specifically for Burnaby Smith, behind the scene, this is the reflection component of legal accounting software. You see how easy that action that you took to capture that information, report it rather, has automatically converted itself into this document. which is the template that's needed anyways. And this is the thank you from the tool that you've invested in, right? But you still have to put all this information in. So you've got the 1,330, and pretty much the same day, of course we're doing it today, the 200 was removed from the trust account. You did not have to generate an invoice, none of that. If your question, or if your client raises the question, hey, where did that $200 go? You can generate a statement of activity which reflects that. You can say, hey, here's the audit trail, right? I got your 1,030, my friend, and the 200 went towards the court fees, just so you know, on the 24th. This is one route. Let's create another matter for the same client. This time I'll say it's LATB. And I'll say this is Smith versus Teffy. Eviction. I'm going to stick that same trust row. Okay? I'm going to initially take that trust amount and add that retainer in. Depositing into trust just like the previous one. This time let's say this is $565 plus $200, $765. Maybe this is a wire transfer or email transfer. Again, going to our CIBC account. Now you can see multiple matters. We're going to split the amount into the second matter and leave this at 0. Because there is still money left in trust, and that's why I was telling you to do that. Now the second, or the pathway, let's call it, that's what I called it, that I took with regards to this particular matter was I now paid for this retainer not from my trust account, but from my general account. Okay? You can see those different types of disbursements. I'm just going to type in court fee. Let's say the same court fee, 200. Now the question is, was there a tax component to it? No, it's tax exempt. Next question is, how did you pay for this, my friend? Mr. Legal Bond, Roger Moore. Well, I could have used my TD operating account. I could have paid an employee who paid this on behalf of the company. Or maybe I used my own pocket money, or money that was in my pocket. This is my personal money on behalf of the client. I'm going to say I used my business credit card, or maybe it was a direct debit coming out of my Riverside account. And I'll hit save. Now you can see the trust receipt hasn't changed. The 765 did not drop down to 565 because there's one more step that needs to be done. The projected balance did because it's highlighting this is the ideal situation. But now there's one step for you to do, and that is to reflect this in an invoice so that you can do your trust transfer. So in the first one where it was money coming right off trust, you didn't have to do this step. So again, reduced bookkeeping, reduced effort. Whereas the second, slightly more effort, you have to generate the invoice. And once you've generated the invoice, there's another act that you have to take. This invoice just clearly states that here's the disbursement, my friend, here's the 765, and that's the retainer balance in trust because I'm going to be moving this 200 of eligible trust transfer. The next step you have to take, and this is your act. This is not the customer. The customer does not have to do anything. You have to move that eligible $200 from the trust account into the general account. Okay? That's called eligible trust transfer. Again, you're not waiting for the customer to pay you. You've earned this $200. Question mark, transfer Again, keeping you compliant because you're not just moving any random number, because there's 765 in this trust account. You could have moved 280, but you only paid 200. So keeping you compliant, not allowing you to move a cent more or less. Again, little things along the way. If you, in Ontario, if you have an EFT, allowing you to fill out a Form 9A and things of that nature, right? Again, purpose-built for legal accounting. Now if I go back to my compliance, I am at the top of the hour, so I'm going to be respectful of your time and take only another minute. Now, if I look at our friend, Burnaby Smith, for noisy neighbor, or rather, no, for eviction. So this was the previous one, 1,330, 200 coming right off the trust. Now, in this case, you can see the reasoning. We got 765 in. The act of doing the trust transfer resulted in that 200 leaving that trust account and now entering that 200 entering the general account, leaving a trust balance at 565. Now in the first one, there is no bookkeeping for general, but in this, there is a bookkeeping for general. So if I go into my general book and do the same thing, so slightly more work, slightly more documentation when you're paying out of general. And here's Burnaby Smith. And here's the $200 for that matter. Again, automatically reflected in that general ledger. Okay? So likewise, you can certainly appreciate that the different pathways and routes that you take to pay off these disbursements are going to be very important for you to consider your overall profit margin, your compliance, and your peace of mind when it comes to recovering expenses that you've paid for. And once again, I thank you for joining me in this webinar. The title for today's webinar, again, was Disbursements Demystified. Hopefully, we were able to help you get a bit of an appreciation for the types of disbursements, some of the types of ways that you can pay for these expenses, and again, choosing the right process, discipline, and the tool to stay compliant. Okay? So, thank you once again. We're at the top of the hour, and definitely want to be respectful of your time. So if you have any questions, please feel free to email us at support@uLawPractice.com. You can also visit us on our website. You can visit us on our YouTube channel, and we're here to help answer any questions that you may have. Thank you very much. Have a great weekend ahead.